Great. Good morning. I'm so excited to be here this morning, and what a timely conversation with the price of Bitcoin hitting 10,000, flirting with 10,000, I should say, this morning. I think it's a very timely discussion to be having. Are we in a bubble, or are we not? So today we have two bulls and two bears, and I think you'll be hard-pressed to find many bears in the crypto space these days. So I'm glad that Robin and Raul have taken on that task for us. I will disclose I am a Bitcoin bull, so I'm going to try not to be too biased and keep our panelists honest. So we only have 30 minutes, and we have a lot we want to get through, so we'll get started with some introductions, and we'll have each of our panelists tell us their perspective and a little bit about how they got into Bitcoin. So we're actually going to start with Murray Stahl. So Murray is the true investing visionary here. He's the founder and CEO of Horizon Kinetics, which is an asset manager here in New York and an investment advisor. And he's also an investor in digital currency groups, so very smart man, clearly. He's been authoring a lot of research on Bitcoin since 2015, and was one of the first institutional investors to really start doing that. So Murray, are you bull or bear?
I would say I'm a bull.
Okay, good to know. And one sentence, why?
Basically because of profligate central bank policies that ultimately have the risk of debasing fiat currencies.
Okay. And when did you first get into Bitcoin, and more importantly, at what price? I think that's important.
Okay, well, I got in, actually it was give or take a day. It was about 2 years ago. So whatever was trading at 2 years ago, if memory serves, it was in the low 400s.
Yeah.
But as the years progress, that number is going to decline, I should warn you.
What made you buy Bitcoin? What made you say, I'm ready to pull the trigger and buy some Bitcoin?
Well, I didn't know very much about Bitcoin. I mean, I was interested in cryptology. It's a hobby. And I started reading about cryptology, and I came across Bitcoin. And there were some papers that I was going to read. They sat on my desk for 3 months. And I finally decided on a given day, today's day is going to read them. And they were rather technical. They were interesting. I won't bore you with what they were. And the third paper that I read made reference to a book, Denationalization of Money by Friedrich von Hayek. And that was a book written in the 70s. And I thought for a second, you know what? I got that book somewhere. And I looked, I had it. And basically he had proposed a private money to basically take away the power of central banks to potentially abuse the currency issuance process. It just wasn't possible in the 70s technologically. And now, having read these papers, I realized it was. And that's when I became interested in Bitcoin.
And you said, okay, I'm ready to do this. What would make you sell Bitcoin? What would need to happen to make you say, you know what, this is no longer interesting, I'm out?
Well, there were a lot of things. So I need several hours to tell you, because this is a project that could fail. But to give you one or two examples, if the monetary policy were to change, it's always possible. There could be, just like Bitcoin, you could say in a certain sense, or cryptocurrency maybe in a larger sense, is a technological leapfrog in a certain sense over conventional fiat currencies. It's possible, in ways we can't yet imagine, something could be a technological leapfrog over crypto. We just can't imagine it yet. But I'm open to that possibility, and maybe that would cause me to sell.
Got it. Any other cryptocurrencies you're excited about other than Bitcoin?
Yes. Ones that I find interesting, Ethereum Classic, Zcash, and XRP, which some people call Ripple.
Got it. All right, thank you. Thomas, you're up next. So Thomas Lee is an investing legend. He was the chief equity strategist at JPMorgan Chase before he started Fundstrat, which is a boutique research firm. And if you don't subscribe to his newsletter, you should. It's phenomenal. They do a lot of great analysis and just published a report on Bitcoin, which is fantastic. Thomas and I had the pleasure of chatting at the Ethereum Classic Summit in Hong Kong 2 weeks ago, and he's absolutely brilliant and phenomenal to chat with. So, Thomas, rundown for you. Are you a bull or a bear?
I'm a bull.
Okay. One sentence, why? What makes you a bull?
Well, I think Bitcoin and blockchain is really one of the most important technology developments that we're going to see for the next 20 years. I think it's going to power a lot of innovation in our economy. And as a strategist, that's really what I've done for the last 20 years, is really try to identify the big waves.
Okay, so this is the next big wave.
Yes.
Awesome. I am happy to be on it with you. When did you first get into Bitcoin, and more importantly, at what price?
And I want to speak from it from a research perspective.
Sure.
I think one of the things that really struck me was a generational perception difference in Bitcoin. You know that at JP Morgan, it was something people talked about frequently, especially our currency strategists. But at the time, they were really dismissing its potential because they thought it was too volatile. But I kept finding that young people, including my daughter, had an intense interest in Bitcoin. So it really reminded me of my tech analyst days in the 90s when the internet was first taking off. The institutional universe was extremely skeptical. And I happen to be a wireless analyst. I really felt they didn't understand how the utility value of something was going to transform the economy. So Bitcoin captured my interest because I think young people see it as a store of value. And looking at it from that perspective, we thought there was huge potential. We first started writing about Bitcoin when it was at 2,400. Now, that was only this year.
That was this year, a reminder.
Yeah.
Insane. What made you buy Bitcoin? What made you say, you know what, this is something I should have in my portfolio?
I think that what really captured our interest was how deep the development community was and how smart they were. I think what most people don't understand is that the people maintaining the code for Bitcoin are the senior engineers at some of the companies that a lot of equity investors completely respect and think are leading in technology. And these guys code for Bitcoin on the side. So until blockchain is hacked, I think it is really going to be, this notion of a distributed ledger is a really smart architecture.
What would make you sell Bitcoin? What would make you say, you know what, this is no longer an asset I'm excited about?
I think that the peak in Bitcoin is going to come from the trading side. I think speculation is going to mark the peak. Maybe the peak comes when pensions start allocating into cryptocurrency.
That is the death knell for Bitcoin. Good to know. I will be watching. And then are there any other cryptocurrencies that you think are interesting or exciting that you're watching?
We do think ultimately it's a duopoly world. So I think there'll be two blockchains. It's really the development of all major economies when you look at market structure. And the Census Bureau has the data. Most industries are dominated by two companies. So I think you're going to have a duopoly. And today it looks like it's going to be Ethereum. But within that other 1,000 tokens, we found a lot of great tokens, including Ethereum Classic, where there's a really strong development community. And I think one of the flaws of Bitcoin is obviously some of the tension with the mining community. I think Ethereum Classic actually seems like there's a strong partnership there.
Well, we're going to come back to mining later because I know you've done a lot of research there. So next we're going to move on. So we've heard from two bulls. We want to keep this balanced. So we're going to hear from our two bears. You may get mobbed after this panel, by the way. So we're going to start with Robin Wigglesworth. He is a senior writer at the Financial Times, and he writes a very popular newsletter called Buy the Dip, or BTD, for those of us who are into that. He has a very skeptical eye when it comes to some of the things he's seen in the investing world, and I've enjoyed following him on Twitter, being a subscriber to his newsletter, because I think he's made some good arguments as to why Bitcoin is not really an interesting asset class from the perspective of markets. So Robin, let's get into it. Are you bull or bear?
I guess I'm a bear here. For me, I struggle to sum up an enormous amount of interest in an asset class that's still fairly small, but it's cool to follow, but yeah, I think it's a complete hokum.
Got it. And one sentence why? Why do you think Bitcoin is so overblown?
Because basically, at best, it's pure intellectual masturbation. It's just something that some really smart people have come up, and we've all decided that it has value and it's cool, and it gets momentum, and then people pile in, and more dumb people pile on. Price goes up, and people, oh my God, it's the greatest thing since the invention of fire. But really, for me, if the Souths or the tulip and the dot-com bubbles had a child, a perfectly formed child, that would be Bitcoin and cryptocurrencies.
So when did you first learn about Bitcoin?
It was years ago. It was must have been 11, 12. It was during the Eurozone crisis when there were capital controls put on Cyprus. And, obviously lots of Cypriots were pretty unhappy about that, including some Russian oligarchs, so they were desperately trying to find ways to take money out of the currency. And I think that was the very first big sort of ramp up in Bitcoin price. And, that was kind of interesting to follow because I do like some of the geekier ways that people try and get around capital controls. But aside from that, it's just, since then I've just been following it, mouth half open. That people
mouth
keep
half open,
yeah, just as people just pile in. Yeah.
All right. Is there anything that would make you buy Bitcoin, that would make you say, you know what, I was wrong?
Nope, absolutely not.
No.
For me, it's
Never.
Wow.
It's
for me, I like stuff that actually has real value as a claim to an actual asset, whether it's a stock or a bond. For me, I'm not saying it can't go up to $1 quadrillion. Like gold has been in a 6,000-year bubble, but really has no real value. Diamonds, like the vast majority of humankind can't tell the difference between lead painted as gold or glass.
So you guys the gold bubble lasted 6,000 years, though.
Yeah, no, exactly. That's what I'm saying. But for me, I like to buy stuff that actually has some sort of rational value.
But that'd be 2617 for the peak.
I mean, we could have like Jesus coin, doesn't that exist? We could have like a Muslim coin. It's a big community of people that might buy that, but for me, it's basic fundamentals are sand. It's just faith. And that faith, as we've seen through centuries of dumb stuff that humans have done, can evaporate very quickly. I mean, it could go to 100,000. I don't care, really. But, I wouldn't buy Bitcoin at any price, put it that way.
But it does, I think you're saying something critical.
Wait, Thomas, we're going to finish intros. I'll let you guys
Look,
duke it out in a minute.
I'll tell you one cryptocurrency I'm really fascinated by is UET, Useless Ethereum Token. Like somebody literally set up as a joke and raised a couple of $100,000. It was explicitly bullshit. He set it up so he could buy himself a new TV, and he raised several $100,000. I mean, really.
So you're long UET.
That's like the South Sea bubble when somebody came out with prospectus saying, I'm going to do something amazing and give me money so I can do it. It's early 17th century satire.
Okay, so the other cryptocurrency you're
UET,
excited about.
okay, so I'm long UET, okay?
UET bull over here, got it. Thank you. Raul, last but not least. Raul is a former hedge fund manager who retired at the age of 36, so I think many people in this room have the same aspirations. I'll be asking you some questions about that later. But now he runs a company called Real Vision, which is a financial media company that provides a lot of in-depth content on various topics and does interviews with the leading financial visionaries. He has been writing about Bitcoin. He's seen a lot of asset bubbles. Obviously, he's a fund manager. And he's been having a good laugh at this whole Bitcoin thing. So, Raul.
Yes, it's two cynical Brits here at the end. I'm less cynical than he is, which is saying something, because I'm usually the most cynical in the room.
So, are you a bull or a bear?
I'm a bear.
And one sentence, why? Why are you a bear?
Because the premise for which I believed in Bitcoin has changed dramatically, and I don't think people understand the changes.
Okay. When did you first get into Bitcoin, and more importantly, at what price?
I first bought it personally at 200 and sold it at just over 2,000.
And why did you sell?
Because I made 10 times the money.
We're going to get into that because I have some questions for you about that as well. And then are there any other cryptocurrencies you're excited about?
No, I'm not interested in cryptocurrencies as a space at all. Blockchain and the applications of it and where it's leading to, super interesting. The architecture of the global financial system desperately needs a change, and blockchain is the answer. I think it's almost a fantasy that Bitcoin or any of the major cryptocurrencies are part of that. Public tokenization is not what the financial system will use or needs.
Wow, that is one view. Excellent. Well, we've done some brief intros, so now we're going to really get into it. I know you guys are just chomping at the bit. So Robin, we're going to start with you. You recently said that the hype around Bitcoin is reaching thermonuclear proportions, which I don't know what that is. But do you truly believe that the only factor driving the price of Bitcoin is greed? Pure greed?
I mean, look, it's hard to disentangle what drives stuff, but fundamentally, people are buying it because they think the price is going to go up tomorrow. Essentially, it's a very overused word, but it's a Ponzi scheme. You're buying it because you think somebody else is going to pay you a higher price for it tomorrow, but eventually, look, maybe Bitcoin does take over the world, and you have everybody buying into it, and it keeps going to like $1 quadrillion. But at the moment, right now, I think what Raul's pointing to is that if the core use of it is as a medium of exchange, it is utterly useless. as a medium of exchange today with the price going up. Nobody in their right minds would ever sell it right now because, it's going up every day almost. Mm-hmm. So, as a store of value, store of values, it doesn't mean that the price goes up all the time. It means it's steady over time, and nobody really believes that in Bitcoin either. So right now, it's basically like, I remember at my old school, kids used to trade marbles. Essentially, and the price went up when parents stopped buying people new marbles. So it was basically the money supply was constrained. So the prices started going up until kids kind of realized it was really dumb. They were spending a pocket money on marbles at school. They could buy at half the price at the store.
So we're all just marble traders. I thought I was the next George Soros. What's going on?
I have so many metaphors I can throw here, but marble traders will do for now.
I love it. So Thomas, digital assets obviously are a little bit esoteric, and I think to the uninitiated, the price swings in Bitcoin appear really dramatic. It appears really volatile. But you recently wrote a great research piece at Fundstrat on the 2 factors you believe drive Bitcoin price, which was interesting. And you said it's the number of unique addresses, which are a proxy for the number of quote-unquote Bitcoin accounts, and the dollar value or volume per account. So can you just elaborate, how do you even go about trying to understand the factors that are driving the price of an asset like this, and what made you settle on those 2 key factors?
Sure. There's a body of work on this. There's a lot of folks who've written about it that when you look at network value, it really is exponentially growing with the number of users. And it's very true for businesses like Facebook, Google, almost all the Chinese internet companies. By the way, all of them have something from nothing, right? They're actually digital companies. And we found that Bitcoin, 94% of the price move was explained by just 2 variables. And in general, in the financial markets, the simpler the model, the better it is for explanatory value.
Right.
We first wrote about that in July. And what we've been really surprised at, just since July to now, so we've had 4 months, it's still explained roughly 94% of the move, including a lot of the pullback. So it works.
It works. Well, if it works, if it ain't broke, don't fix it, right? Murray, so you've obviously also been a prolific writer on the topic, and you've been articulating your personal investment thesis since 2015. You wrote a piece this February where you talked about how an investment in Bitcoin is really a short on the rest of the global currencies. So can you talk a little bit more about your perspective on that?
Yes, so basically, the definitions of money really come from decades ago, when people really used cash. So they used checks to a degree they don't use anymore. So today, we have to think, I believe, in terms of purchasing power. If I have $1 million of treasury bills, it's not money in any conventional sense, yet I can drop it into the CME clearinghouse, and I could buy $30 million worth of S&P futures. So it has enormous purchasing power. And that purchasing power has to be represented into something, ultimately, which is not debasable. And Bitcoin is not debasable. If they follow the protocol and if they remain loyal to it, and there's going to be 21 million Bitcoin in the year 2140. And anything can be money because it's just a matter of consensus. So in the Bible, if you read your Bible, Abraham bought the tomb of the patriarchs for, I think it was 40 shekels or 140 shekels of silver. There was no central bank. There was no economist. No one told Abraham what 140 shekels of silver are worth. They figured it out. Consensus is the best way to organize an economic system. And that's what Bitcoin really is.
All right. So should I be levering up on cash and going short if I'm long on crypto?
I don't think leverage is necessary. It just adds an extra level of complexity. Leverage really, it's leverage that is the touchstone of most of the bubbles in the world. And if I may say, at the risk of extending my time just a little bit, if you go back and you read Extraordinary Popular Illusions and Madness of Crowds by Charles Mackay, it's one of the classics of financial bubbles. And the first thing you'll read is about the Great South Sea Bubble. So this initial public offering surge in the early 18th century. And it came to grief, as most crazes come to grief. And at the end, Parliament passed a Bubble Act. And many writers, if you go back at the time and read, you'll see that
the idea of a joint stock corporation, people band together and pool their capital, do something, crazy, ludicrous idea. And they thought poorly of it for not decades, centuries, because you go and read The Great Crash, written by John Kenneth Galbraith, and deals with the Great Crash, but in the introduction, he talks about how at the time of writing the book, which I think was roughly 1954, the Dow Jones Industrial Average attained the pre-1929 high. The United States Congress, believe it or not, the United States Senate, actually initiated an investigation into the Dow Jones Industrial Average for the mere reason it hit an all-time high. And look at the book, and it's hard to believe. So people believe all sorts of things. But at the end of the day, if you want a standard of value, you want something that even a well-intentioned person can manipulate for whatever reason, because sometimes they make very bad judgments. That simple.
And do you think Raul and Robin are making bad judgments on Bitcoin?
I would not care to disparage the wisdom of my British colleagues, especially since it was Britain that gave us the Bubble Act, and I greatly respect it.
Got it. So, Raul, you must be chomping at the bit. Let's get you into the fray here. So you made a comment, and I think you actually wrote an article boasting about the fact that you bought Bitcoin at 200 and you sold at 2,900, and I think you were very pleased with yourself this summer. Now Bitcoin is at 10,000. How do you feel about that choice?
Very pleased with myself. I've got money in the bank from it, and cash. In the end, our society runs on cash. So, I was pretty pleased with that. It's gone up further. Do I care? No. I look at other stuff.
Care.
No, I'm a macro guy. I look at a million different opportunities in the world.
Okay.
And so the fact that it's got run further is not something I lose sleep over whatsoever.
So what made you decide, other than, hey, you know what, I'm happy with this return profile, was there anything else that factored into your decision to sell at that point this summer?
Yeah, when I bought Bitcoin, I believed in certain principles that was there. One that was sacrosanct, the 21 million coins, gave it an inherent store of value. I also thought it would be an interesting payment system that the world needed, and also part of the global architecture for the financial system, clearing, custody, settlement, letters of credit, that kind of stuff. So those are the tenets of which I believed in Bitcoin. And I strongly believed that this was really the answer the world was looking for. Then things started changing, and I realized that one by one these tenets were going. The forks, whatever anybody thinks they are a form of dilution or a rights issue. What you're ending up doing is taking away small parts of the market share of Bitcoin. Right now there's a stampede for Bitcoin, so it gets absorbed, as you've seen with rights issues. But over time, what you're doing, that 21 million coins, that previous chain has been duplicated. So therefore, it is dilutory, even though nobody wants to believe that. So that ruins the sacrosanct 21 million. So that worries me somewhat. I'm also worried about the transaction system, because while Silicon Valley is puffing itself up and patting itself on the back about how great cryptology is, India managed to introduce a payment system with no middleman, with 1.1 billion users, that's currently working, and is 50 times faster than Bitcoin. So whatever Bitcoin thinks they're solving, they're not solving. The financial system is fine to find other ways of doing it. They don't need a publicly distributed ledger. That was something I believed at first that they did need, and I realized you don't. Okay, it might get hacked, but basically because of the low amounts of money stolen within the financial system, it's an insurable event. So they don't care about that. So you're trying to solve a problem that doesn't exist, which was another key thing. Then I realized that all of the people that I was speaking to who'd been involved in this world had moved towards, and I know it was a dirty word people mentioned before, people laugh at it, the private blockchains.
Yeah.
Now, private blockchains are real because that's what the financial system needs.
Private blockchains are real. Okay,
real as
so your blockchain, not Bitcoin.
Correct.
Okay.
Because I'm meeting companies who are using it for shipping already, for letters of credit, for trade finance, for custody, settlement, clearing.
I have a question on that. So why do I need a blockchain for that? Why can't I do it with a shared database?
You can. I mean, look, blockchain is still just a database in the end, right? It's just a different form. So it's irrelevant, and that's it's a weak argument that comes up, oh, it's just a database. Basically, they're all databases.
Wait, are you calling me weak, Raul?
No, I didn't say that.
We're going to get into this after the panel.
What I'm saying is all you need is a proof amongst, let's say, 20, 50, 100 participants. That's enough that the financial system needs. It doesn't need the endless points of proof. It doesn't need the trustless ledger. It needs a trusted ledger amongst enough participants to make it trustworthy. So if Lehman was the great solve for event, anything that is a private blockchain solves for Lehman or solves for AIG, it does not need a publicly distributed ledger, and the private sector doesn't want it, and it cannot use a token.
This is not a blockchain panel, so I love your enthusiasm. We're going to keep it on cryptocurrencies. So I'm going to go back to Murray, because I'm now depressed. I'm now sad. So in one of your research briefs, Murray, you noted that merely the 4 FANG stocks, which is Facebook, Amazon, Netflix, Google, are worth 1.3 trillion. Which is 80x the value of Bitcoin at the time you wrote it. As of today, I wrote this question a week ago, so it was 10x a week ago. It's probably 8x now. You said that by the time the majority accepts Bitcoin as a valid asset, it'll probably be too late for most people to buy it. So do you think the rapid price run-up we've seen now is a manifestation of that? Are we just getting started?
We haven't started yet.
We haven't
going
started
to start.
Yet. Okay.
See, so as far as the question of starting, when it comes to an asset, when it comes to politics, it's one human being, one vote. When it comes to things about money, it's not only one human, one vote. It's how many units of currency each human being has. You may have $1 billion, you get 1 billion votes. Mm-hmm. The money is not going to buy Bitcoin in any time in the foreseeable future. It won't even buy a Satoshi. And I'll tell you why. Not because there's a law or there's some technological problem of custody they can't solve. The issue is that if you were a $300 billion pension fund and you bought 1 Satoshi, obviously it went to 0, it's statistically irrelevant, but your judgment would be questioned. No one at that level is going to take the reputational risk of having their judgment questioned until such time as enough people with sufficient gravitas, more gravitas than I have, are going to say it's at least a reasonable investment to undertake. That's years from now. Anyone with gravitas is going to tell you, don't go near it. And that's, so when the people with gravitas say it's an investment you could consider to undertake, although you might not, then it starts.
And then it starts.
And
when the pensions start buying, as Thomas told us, we're all getting out, right? Just kidding. So, Robin, back to you. So you called Bitcoin a trading sardine, which I thought was really fun. Do you want to just quickly tell us what a trading sardine is?
Well, the trading sardine is just a story that Seth Klarman, a very famous hedge fund manager, wrote in his book called The Margin of Safety. It's a great book. He's actually owns the rights, so you can buy it second hand on eBay for $1,000 or so, I think. But anyways, trading sardines was apparently on the west coast in the US at some point. There was a sardine shortage, so people started trading cans of sardines. And the price went up and up and up, and it became a mania. At one point, one sardine trader, to celebrate a deal, said, I'm going to really celebrate here. I'm going to kick back and enjoy my sardines. So he opened up a box of sardines, ate them, and they were rancid. They stunk to high hell. He went to the seller and said, dude, what the hell? You sold me rotten sardines. He said, look, matey, these aren't eating sardines. These are trading sardines. But that's an example of how certain assets can get divorced from their fundamental use, their actual, what Bitcoin might have, in theory, have been. I mean, how many here would actually buy a T-shirt or a cup of coffee with a Bitcoin today? You wouldn't part with it in a million years because the price keeps going up and up. So it actually became useless for the things they were supposed to solve. I mean, for me, the tragedy is when I look at this crowd of incredibly good-looking, smart people that are wasting all your brain power on something that is essentially just a trading sardine. I think it's tragic. You guys should be doing so many things to improve the world. And spending less electricity than, all these smart people in Iceland using geothermal energy, electricity, it's almost the digital equivalent of Maynard Keynes' idea that we solve a recession by throwing shit in the ground and digging it up again, just to create activity.
We're making magic internet money. Come on, get on the bandwagon.
Yeah, as you can say, I'm a little bit bearish. I am, yeah.
You're so bearish. I love it. So it's It's good. I like it. I think it's healthy. So last question for Thomas. So I actually think this is really interesting. You recently put together a very interesting analysis around HHI and Bitcoin and using that as a proxy for market concentration. One of the conversations we haven't had yet that we'll sort of wrap up with is around mining concentration. So can you just tell us a bit more about why you decided to look at concentration and what you think that means for the future of this asset?
And actually, can we keep it to 30 seconds?
We will keep it brief. I'm sorry. We are wordy on this panel. So very quickly, mining concentration, why it matters.
Yeah, mining is an important part of blockchain because they do proof of work, and as you know, that's the nature of decentralized trust is proof of work. But mining is a for-profit, capital-intensive enterprise. It lends itself to concentration, right, to become very corporate. One way to measure that is the Herfindahl Index. You know, the Department of Justice uses that to look at approving mergers. In the mining industry, Herfindahl Index of 2,500 is considered concentrated. Bitcoin Cash, or Bcash, actually I should say Bcash, is at 2,600, which means it's essentially a token controlled by the miners. Bitcoin's number is 2,100. It's doubled since January. So Bitcoin, the biggest risk I think in the short term is that it's at risk of being controlled by the mining industry.
Got it. All right, well, let's give our panel a big round of applause. I've enjoyed it.